Oh, the sweet sound of chow snore. Oh, you only get the sweet sense, the sweet sound of chow snore on this channel. Nowhere else. What is it that I do? I'm day trading their hands up. So trading the stock market, essentially. Profit. Trying to make money whilst drinking wine. Now, anybody watching in the US probably thinks I'm drinking wine, trading the stock market in the early afternoon, but no, it's the early evening. It's almost 8 p.m. So it's definitely wine o'clock. I've even eating peanut snacks. Taken 2 trades since this since the early stream. Traded SIGA and AMC. Couldn't really get much from AMC, if I'm being completely honest. It popped up without me, and then I got on about. The S&P 500 is looking or trying to get green, not far off now. If you look at it on the 15-minute chart, it's probably easy. So we had this sell-off from the open and turn around, and we're not too far off. We're a couple of percentage points, and we'll get green. Or a couple of points, and we'll get green. So 411. It needs to get over 413 today. Let's get the stream ready. NASDAQ was green for a moment then. We actually did have a red to green move, and it's just gone back red again. What can I do to raise it up higher? To raise what up higher? My profit? Well, I'm already 3,300 in profit today, which is not bad. I mean, if I did that every day, you know, there's over 600,000 a year for that, 700,000 a year. Let's see. A bounce on the VWAP would be nice. It's not easy. Don't get me wrong, Hanzo. I'm not being blasé. Absolutely back for the big verdict there, Jack. I'm not being blasé about it, Hanzo. I lost a lot of money when I first started trading, and it does take. It's like any career path. There is an element of a learning phase that you have to go through. It's skills that you have to perfect. Well, not so much perfect, or that you have to acquire, like any particular profession. Now, is it a lucrative profession? Yes, it can be very lucrative, but it's also very risky if you don't apply the right risk mitigation strategies, and you don't have a trading strategy to begin with. So you do have to bear all that in mind. It's not one of these, you know, people often see the marketing around day trading and people earning, you know, thousands a day. And whilst I've proven that that's possible, my results are not like your typical trader. Most people lose money. 85% of people that trade the stock market on a daily basis lose money. If you include other instruments like Forex, futures, etc., crypto, that percentage rises, and 95% of people lose money long term. They're never profitable. And you've got to ask yourself, why is that? There's a number of reasons why that is. The first reason is the approach of the gambling mindset. If you gamble on the mindset, or if you gamble on the market, it's going to treat you like a casino would treat you, and you will lose your money. If you don't manage your risk, so a lot of traders come into the market and they think, how much can I make, rather than how much do I need to protect, or how much do I need to prevent losing. So if you have the mindset that I'm not going to lose money rather than I'm going to gain money, you're already halfway there. Risk mitigation is probably the single most important principle of day trading. Risk management, absolutely, Les. And the next reason, as Les quite rightly highlights, is no strategy. If you go in there with no idea what you're doing, of course you're going to lose money. The market doesn't care who you are, it doesn't care about your feelings, and it doesn't care about your bank balance. It will take your money off you like it will take your money off anybody else. So if you have no strategy and you don't manage your risk, then absolutely you're going to lose money. And I found that out in May. Well, actually, today. There's an argument either way. I mean, I actually lost money in May in net terms because of fees and transactions, but the actual trade, profit and loss, I actually made money in May. So I've actually made more money today than I did the whole of May. But that's a different conversation altogether. Very close to the market's going green, and then they pull back. This time, yeah, we've got an hour. A little over an hour before the market closes, so we could still go green on the day. It is very sideways at the moment. All right, it's a bit of a dip, but it's sideways at the moment. It has been this week. We had, well, yesterday it was sideways. It's kind of sideways today with a little bit of a dip. But it looks like we're going to be finishing very similar to where we finished yesterday. So I saw that, Jack. It dropped about 7%. I'm not too worried about that as long as it stays above 30k. The line in the sand is 30k. If it stays above 30k and continues to move sideways, what we're going through at the moment is this sideways chop in the crypto space. Yeah, ever since this Terra Luna debacle, which I suppose they'll flush out a lot of the non-believers that were in it for a quick buck. All we're getting is sideways chop. 30,000, 29,000, 31,000, 30,000, 32,000, 31,000, 30,000. You know, we're getting a lot of sideways chop. There's not a huge range. I mean, there's huge range because we're talking thousands, but you get where I'm coming from. I think the crypto bubble has been burst, first and foremost. This whole Terra Luna debacle, I was reading about it earlier today, and Binance, who were heavily involved as well, they've renamed the original Terra as Terra Classic, and the original Luna as Luna Classic. So they've got new tickers. They've got Luna 2.0 listed now. It's a mess. It's probably the easiest way of describing it. All right, let's look at what's moving. Red box still up there. I can't believe red box is still around. Down on the day, but trying to make a concerted effort to come back this this second half of the session. So red box bounced on the VWAP. If you look at it on the 5 minute, it sold off from the open. It came back, bounced twice on the VWAP, and now is moving slightly upwards. So I think the target there is probably the 200 EMA, i.e. 620. That will come down. If we can get to 620 before the close, that red box could be interesting. Both Tonix Pharmaceutical and Helios Medical had pretty much 100% gains on the day, and then they sold off and lost half the gains. So Helios is 49% up at the moment, and Tonix is 36% up at the moment. But they're both sold off. So we pretty much called the high. Actually, we missed the high with Tonix. We traded up to kind of $4. It went up as high as 470s, 480s. But we missed that while I was out walking the dog. We missed that one. It was a lovely 5 minute pullback here, and I moved back up. So there's a nice little flag set up there. But look at it on the 1 minute, it's selling off there. What have we been trading today, guys? If let me know in the chat. Have you been trading today? That's the first thing. And if you have, what have you been trading? Have you managed to have a profitable day, like myself? Are you profitable? Are you in the green? Or have the markets kind of fake you out and gone against you? Have you lost money today? Let me know. It doesn't matter if you've been trading on a paper account or a real live account. Just let me know in the comments what your situation is. If you have been trading, if you've not been trading, let me know. Is it something that you're interested in pursuing? I'll be back in just a second. I need a top up. It's 8 p.m. where I'm sat, and it's not a problem if I don't call it one. Only drinking problem if I miss my mouth. Hoodie. Let's have a look at Hoodie. Let's clear some of these lines so it's a bit clearer. Or a bit of a V bottom. Definite reversal. Captain, my captain. EPTN, Septon. It's not great volume. It's moving up in the right direction. There's no volume on it. Steady gainer all day. Laredo Petroleum. More expensive stock, but it's up almost 20%. Okay, so what else is moving? Well, Via's got quite a lot of volume today. What is it? 20% of Via. Still moving. So sold off at the open, and now it's pre-market high was 474. Opening range high was 472. So we've got 30 cents to reach before we get to those kind of levels, but let's have a look at on the 15-minute chart. You'll see what I'm talking about. Had this initial move up, and then a sell-off. Now it's moving back up again. So this is you've heard. Funnily enough, I just did a video on this yesterday, or was it the day before? Whatever. This is an inverted dead cat bounce. So you've got the move up, and then the bounce. So this is an inverted dead cat bounce. It's looking like it's going to move up towards kind of 450, 460. How old were you when you realized what the analogy of the dead cat bounce was? So what is actually, what a dead cat bounce is that when stock tends to plunge or plummet in price, and then it hits the floor, what's perceived to be the floor, and then rallies for a short period before then coming back down to the floor. That's what happens. However, that being said, it comes from the analogy of someone standing on the top of a building, throwing a cat off, it hits the floor, and obviously dies, and bounces. And then when gravity takes over, it lands back on the floor and does, back down to ground zero. I'm kind of thinking, what a bloody morbid analogy, But so it would be this kind of pattern, but reverse. So it would be down instead of up, and then there would be a bounce. So it would come down and then a bounce, whereas this is up, down and round. So this is an inverted dead cat bounce. You tend to see them most in the higher time frames. So in the 1 minute time frame, you can't see that, but in the higher time frames, certainly. I'm glad you're paying attention, Les. The diamond patterns, it's a reversal pattern, but it's a reversal pattern with a little bit of volatility increased. I do trade reversals, but I prefer to, if I can, get on a stock, a hay flossy, get on a stock that's super strong, going parabolic. What else have we got? EVLO. No. No. That's moving up now, but it's having a good day. 35%, and it's on the way up. Hey Matty, yeah, of course. Why would I not be? I mean, we're just starting off a new month. I'm green to start, which is better than we were the last 2 months. Granted, April was a profitable month. Well, I'll not go into that again. May was profitable based on trade profit, but not net profit. So kind of a break-even month almost. But yeah, I'll be trading tomorrow on Friday. I don't have to worry about evening football now, so you know, I've got pretty much 3 evenings during the week, so I can trade power hour if I want to, if I'm feeling like I've got the energy to. I'll certainly be trading the open and the pre-market. That's where I tend to make most of my money, most of my gains. Majority of my gains, not even most, but the majority of my gains is pre-market and the open. The open in particular. The first 90 minutes of the open, first 60 to 90 minutes of after the bell, that's where I make most of my money. I could have quite a profitable, based on my statistics, I could have quite a profitable business just trading from 9:30 till 10 a.m. Market time, that is, not obviously not Dublin time, that's East Coast time. Oh, hey Alistair, I thought you'd be playing PlayStation at this stage. Keeping the teenagers happy. Well, TNXP just seems to have, it's back down at 313s. It went up to almost $5 at one stage, so that's well and truly sold off. I got a little bounce out of AMC. I didn't get the absolute top of AMC. I got a little bit off it. Selling off there. David Gale, our old friend. Abbott Pharmaceutical. Why is this moving now? And that's the way it should be, Alistair. Yes, I am indeed, Flossie. If you're a beginner trader, the art of having discipline is not to let the market seduce you. So you get green, you walk away. It doesn't matter how green you get. So if you reach your daily goal, absolutely walk away. As you become more proficient, you can hang around for longer. But beginner traders, I would say less is more. So you get green, you walk away, you stay green. If you've hit your goal, you take your daily goal and you be happy with what the market's giving you. Don't get greedy. Greed is the fast path to blowing up your accounts. It's like, think of it in Jedi terms. It's anger and hatred are the path to the dark side. And in trading terms, greed and fear are the path to blowing up your account. I don't know about shoot down. I'm thinking it's going to get green on the day. Let's have a look at this, the S&P 500, the SPY. I'm just going to put it on the 15 minutes, so we've got the whole day. So we're kind of trading sideways. In the bigger picture, we're trading sideways at the minute. So pre-market, we had a couple of little bits of moves, but we sold off at the open, and we've been coming back since lunchtime. We're making a move. We're not far off going green on the day, so I don't think it's going to shoot downwards. I think the wider pattern is not saying it's going to be a downwards. I think it's probably retracing a little bit. This little bit red yesterday, a little bit red today, but I think we're in a good place. Unless there's a catalyst, unless Jerome Powell comes out and says something stupid, which You know, that would be unusual, wouldn't it? But let's say Jerome Powell comes out and says something stupid that impacts the market in a negative fashion. I think we might have, you know, a decent gain across the course of this week. But you might be right, Super Chip. I'm just giving you my opinion. Your opinion is equally as valid. I'm not a financial advisor. It's not financial advice. It's my channel, so I'm more vocal. But I do appreciate your opinion, Super Chip. I think you've got as much chance of being right as I have. When do you buy or sell? Green up or red down? Yeah, the red candles are when it's selling, and the price action starts at the top and moves down. The green candles, it's in the inverse. When do you buy or sell? You look for patterns within the price action. Scotland, of the utmost sympathy for Ukraine and the current plight, but you can't beat Scotland versus England. It's just got old world history to it. Afro Soul, yes. I still succumb to emotions, but the best way that I've found of dealing with emotions is lose your money to start off with. And you think I'm joking about that. What I mean by that is mentally lose your money from day one. So when I put money into a brokerage account, deposit the money, and I think of that money as that's now gone. That's the money I've paid for access to the market. I'm trading with that money, but if I lose that money, I'm not overly disappointed because I've already paid that money to the market. That's my fee to access the market. That's the way I view it. That's in my mind, that's the way I view it. And from an emotional point of view, it helps me deal with it. So that way, at the end of each month, I look at what profits I've made or not, as in May, what profits I've made, and I can withdraw from that, leaving the original stake in for the following month. So I'm only taking profits I've made on a monthly basis. I'm not taking the original stake back out, and that's how I deal with it from a money. It's what the Italians call a faguzzi. It's not real. I have a really good day. So yesterday I did 6,000. Today almost 3,500. It's not real. Why? Because I've not withdrawn it from the brokerage yet. It's only real when it hits my bank account, when I can spend it. And until I can spend it, I can lose it just as quick, if not quicker, than I've made it. So keeping that kind of mentality that it's not real until I actually withdraw it, it helps me keep a check on the emotions a little bit. The emotional side is difficult. I've got to be honest, that's the most difficult thing you're going to come up against. As a trader, as a new trader, there's all kinds of emotions that will go through you. Aside from, you know, the palpitations you get when you're in a losing position, you try to stay in control. You've got the greed factor. You've got the fear factor. You've got, you know, the fear of missing out. You've got, you know, all kinds of emotions that are in place. You've got the risk element. You've got so much that you've got to deal with, which you can only deal with if you practice. And practice in a simulator, it's not the same, but you go through if you practice in a simulator, you go through the motions and you learn the discipline. The discipline itself will help you deal with the emotions, because you get into a losing position. If you're disciplined, you'll cut the losing position, and you've lost a little bit of money, but you don't even think about it. You move on to the next trade, and you don't think about making up the last trade. You start from a zero. Every trade you start from a zero. It's only when you're not trading, it's only when you're finished, you then zoom out and you say, okay, well, how did that trade go for me? Okay, well, I've lost money on that trade. Well, okay, where am I on the day? Okay, I'm losing money on the day. Where am I on the week? Where am I on the month? Where am I on the quarter, etc., etc. And if you're in a bad position, or you find yourself in a negative position, zoom out and keep zooming out until you find yourself in a positive position. If you find yourself in a red position on the month, have a look at where are you? Last month I made a huge drawdown on day one, and my zoom out was okay, it's day one, I've got time to make it back. Granted, later that week I made another huge drawdown, so I was kind of pushing water uphill for the most of May, but the fact that I've been profitable the whole previous year and the rest of every month this year prior to May says that it was an anomaly. I've looked at my trading in May, I've recognized the mistakes that I've made, and I intend to rectify them going forward and not make them again. No problem at all. I mean, anyone that's a regular to this stream, that's a regular to this channel, will tell you that I am totally transparent with the fact of how risky trading is. I show my losses just as often as I show my winners. Well, actually, I show my winners more because I make more winners than I do losses, but that's just statistics. But I don't try to hide my losses, is what I'm saying. It's a risky game. Trading is risky. Not every trade is going to go your way. Most people lose money, and if you get to a point where you're making money, you're making money consistently, you are in the top. You can consider yourself an elite trader. You're in the top 10-15%. Absolutely, Alistair. That's a big thing, which is why I like to take profits early. Or take some profits early, so you get into a winning position, you take some profits early, and then you can move your stop loss up for the remaining position to break even, and knowing full well that in that trade you can be a bit more risky. You can actually even size up, if you will, and move your stop loss up because you've got a cushion on. Once you've got a cushion on the trade, it makes it so much easier to trade, just from an emotional point of view. Absolutely, totally agree with you, Alistair, and you've obviously been paying attention. I like to think I've taught you everything that you know. I've not taught you everything I know, but that'll come. I mean, let's face it, the whole point of being profitable as a trader, and I said this earlier on this stream, is it's not so much how can I make per trade, it's how much can I protect per trade. So as soon as you get into a winning position, how do you protect it? How do you maximize that winning position, and how do you protect it from further losses? Risk management is the #1 principle of trading, and if you execute a very disciplined and regimental risk management policy, you're trading, emotions will never. The way I would say it is, if you're getting emotional about your trade, if your heart's beating, if you're getting palpitations, if you're getting angry, whatever it is, you're trading too big. Scale down, trade smaller. If you're getting into a position and you're losing $1,000 and you can't afford to lose $1,000 because you've only got a $5,000 account, you're trading too big. $1,000 to a $5,000 account is 20%. You should never be risking 20% on your account. So if you've got a $5,000 account and you're risking $50, are you really going to get emotional about risking $50? Probably not. If you're risking $100, you're probably not going to get too emotional about risking it on a $5,000 account, because you know if you lose $100 on a $5,000 account, you've still got $4,900 left. And that's where you've got to, approach it to keep in check with your emotions. You trade with a share size, or a risk level that you're comfortable with, that doesn't get your emotions involved. And that's the best way to keep your emotions, because occasionally I've gone big size and it's gone against me, and straight away I'm thinking, my eyes get wider and I'm thinking, okay, can I trade my way out? My first thought is always, it's the wrong thought. It is absolutely the wrong thought. My first thought is always, can I trade my way out of this position? My first thought should be, cut the trade, don't lose any more. But for whatever reason, my first thought, and it's a human nature thing, my first thought always tends to be, can I trade my way out of this position? If it's just a quick flush, it's like, okay, is this a flush that's going to get bought up? Should I add to my position? And again, you should never add to a loser. The only time you buy a dip, and this is another rule of trading, buying the dip is a risky strategy, but it's a very profitable strategy when it's executed correctly. The only time you buy a dip is when you've got a cushion on the trade. So if the trade starts to move up, you're taking a little bit of profit and you move to break even, it keeps moving up. Then it dips. Then you can buy the dip because you're buying you're buying from a point of strength. And that way, what you're actually doing is you're just increasing your average cost. You're not actually going into the hole. You're not going into debt or into a losing position. If it continues to dip after you've done that, maybe you'll go into a losing position, at which point you need to be prepared to cut that loss. However, if you find yourself in a losing position, you should never buy the dip from a losing position, because it can quite easily, whether it does or doesn't is irrelevant, it could quite easily go against you and make that losing position an even bigger losing position. So you should cut the trade, and if it does turn in your favor, you can re-enter. You can re-enter for bigger size if you need to, but don't do it to make up what you've lost, because that's revenge trading, another swift pathway to blowing up your account. Absolutely. So that 35,000 shares, what happened was I've got hotkeys and I pressed the hotkey for 5,000 shares and it stuck and it went to maximum size. So basically it stuck and it registered 7 clicks on the keyboard, and I'm like, I only pressed it once, but the button stuck, so I had 7 times what I actually wanted to enter to. And I was like, okay, after this trade, I'm just going to go and change my underwear, thank you very much. What can you do? Now, at that stage, I should have just... And again, what did I do? I held on to it thinking, this might go for me, and it's a mistake, it might go for me. But it didn't. It went against me, and I lost, I can't remember how much I lost, but I lost a lot of money on that particular trade. So... Super Chip, you're absolutely right. It's an emotional thing. But what Afro Soul was asking is, how do I manage my emotions? How do I keep my emotions in check? And revenge trading is something you do on emotion. So whether we all do it or not is kind of irrelevant. Yes, we all do it because we succumb to that emotion. We all chase action. We all jump in because something's moving quickly, and then it ends up going against us, and we lose. So it's you know, what's that? Has there been a verdict on the Turd and Debt trial? You telling me there's a bit of verdict, Squibby? It was hardly ever in doubt. I mean, that girl's a bunny boiler. No, it was worth a clean keyboard, Phil. So yes, worth a new keyboard, worth a clean keyboard. It's because of I'm putting it down to the situation. Bad workman blames his tools and all that kind of stuff. But as you all know, I've just recently moved apartments, and as part of that move, I should have taken the opportunity to. I just did this last weekend actually. To clean my PC, clean all the bits and pieces, and make sure everything's tickety-boo. So I've just done that this last weekend. I've had an overheating issue with the chipset. That's fixed. There was dog hair in the fans, which I have a chow-chow. Go figure. Where could the dog hair come from? So yeah, what I would say is equipment maintenance. Doesn't matter what job you're in. If you have an occupation that requires equipment for you to carry out the duties of your occupation, maintenance and hygiene are essential for that job. Yes, there is. It's called YouTube. If you go onto my YouTube channel, Ali, if you go onto my YouTube channel, you can see my trading screen. You can see a lot more of what I can see. You can't see everything because I've got 4 screens open, but you can see a lot more on my YouTube or Twitch. So if you go into my link tree, go into my profile, there's a link there that says TikTok Trader, and you click on the link and it will bring you to my link tree. In my link tree, it has a link to the YouTube channel. Go and subscribe to my YouTube channel. You can do that. 15 million in favor of debt. It should be 50 million in favor of debt. Bankrupt the psycho turd. So this is what we're looking at right here. Is the S&P 500. Back to the 1 minute, 5 minute. I've been talking too much. We've got half an hour of the market left, and I've not even been looking for trades. Why? Because I've kind of, whilst I've not hit my aspirational daily goal, although saying this, looking at this right now on the 5 minute, we're getting a little bit of a double top here, which is kind of bearish. So I don't think, maybe we won't see a positive close. Just be wary of that pattern there, guys, on the 5 minutes. A clear double top. Well, if you want to learn how, well, they say buy the rumour, Squibby, you sell the news. If you want to learn how I trade, Ali, just like as I say, go into my link tree, click on the first link. Oh, I'm not trading hoodie. I looked at it earlier, and there wasn't enough volume for me. You know what my principles are, Squibby, on trading low volume stocks. It's got to have volatility and it's got to have volume. That's where I make my money. Is it's got to have both. One without the other is useless to me. How much is my course? It's $119 US plus tax, which varies from where you are. But it works out if you're in Ireland, for example, where I am, it's about $146, which is about 130 euros. It's about 120 pounds, wherever you are. If you're in London, it's about 120 quid. Now it's a subscription, so it's 120 quid a month. If you get through the course in a month and you've learned everything and you're okay with that, that's fine. Cancel, don't worry about it. If you're not happy with it after the first week or two, cancel, ask me for a refund, I'll do that. But there's about, how long is it? It's increasing. There's about 18 hours of lecture material. There's from Benzinga, I've included some Benzinga tutorials to help with scanning and stock selection as well. There's probably another 4 hours of Benzinga tutorials. There's a lot of reading material, you know, stock market books and so on. So I would say realistically, if someone says how long is it going to take to learn how to day trade, I would say it's probably going to take you 3 months before you're ready to put money into a live account, on average. Now, some people can do it quicker, some people can do it for less. And thanks, Phil, I appreciate that. Good course recommended is what Phil's saying in Twitch. He's on the course as well. We've got some people in the chat that have taken the course that are profitable not only today, but of learning how to manage that profitability. So yeah, I would say 3 months is probably the optimum. Now, take a month, fine. Get a discount for taking 3 months. What you will get as well is access to the private Discord for the community that I'm building as well, where I will mentor you one-on-one, one-to-many, whatever it is. You need me to look over your trades, where you're going wrong. Whilst you're paper trading, it's better to do it that way to start off with. I'm happy to give you pointers, and I've been doing that with all the students on the course as well. It's I would recommend anybody paper trade before they put money into a live account. All the lectures are recorded, but I do engage directly. So I've been thinking about whether we need to, whether I want to be doing a webinar, weekly or monthly webinar or whatever it is, just to go over the events, because May, for example, was a very difficult trading month. We had a lot of adverse trading conditions. It's the first month where I've actually not made money in over a year. So January 21 was the last time I didn't make money across the whole month. Now, my trade profit was green. I made $2,000 in May, trade profit, but when I factor in all the transaction fees, commissions, fees, etc., I've actually lost $10,000 in May. So, you know, I do that, Alistair. And I will be engaging you and the rest of the students for that. So I've got a couple of reviews up there already, which are positive reviews. But I'll probably start putting more reviews on the homepage. And who knows, I might just get onto Trustpilot or something that's reputable with the reviews as well. So yeah, but you know, I've not had a bad review yet, which I hope that continues, because I'm enjoying teaching. I enjoy teaching how to trade, and the fact that I am profitable and I prove that I'm profitable, not just by showing that I'm doing it live and showing you how I'm doing it live, but also I post my trader view statistics and reports, and I publish my broker reports as well, which shows my profitability. So I'm not trying to hide anything. What I'm trying to do is give a balanced view of how to day trade the markets. First and foremost, can you make money in the markets? Yes, you can. 100% absolutely. Is it risky? Yes, it is. 100% absolutely. The problem that I've got with the stock market as a whole is we don't get taught about this kind of stuff in school. The level of globally, not just in the UK or Ireland or where I'm the majority of the people on the stream are from, but the US, Canada, wherever it is, the level of financial ignorance is shocking, because we're not taught about the finance industry, and it should be something that we learn about in school. Oh yeah, I won't be asking you for a positive review, Alistair. You know, you're forgetting that if I'm trying to cater to the American market, they don't understand sarcasm. They think irony and sarcasm are the same thing. Canada's the same. I mean, isn't Alanis Morissette Canadian? She wrote a song called Ironic, and what's ironic about the song Ironic is that she doesn't understand what the meaning of ironic is. It's a one-off course, London. You'll never find another one like it, trust me. No, but in terms of what you get with the course, you get the direct engagement, you get the access to the Discord, the private Facebook group, you get access to me as an individual, as a mentor. So it's not just the recorded content on the course. It's if you've got problems, let's say problems, if you don't understand any elements on the course, you can come to me directly for one-to-one. I'm happy to jump on a Zoom call with anybody. I recommend TraderView as a journal. It's the journal that I use, but also you can, if you use TraderView as a journal, there's a section on there where it says mentors, so you can actually put me down as your mentor, and it gives me access to view your trades and your trade logs, so that I can then give you, pointers and advice on how to improve your trading with that as well. I refuse to send signals and alerts. The simple fact is that I get things wrong. And I'll be the first to admit that. Anybody that's got a Discord or a some kind of service that's selling signals and alerts, first and foremost, the likelihood of them being right all the time is minimal. And from my personal experience, having lost money following some of these and subscribing to some of these a couple of years back, they know less about the market than I actually do. And that's not me blowing my own trumpet. It's these guys that most of them are scammers, okay? So these people selling Discords and services that are providing alerts and the likes, wouldn't you much rather learn to find out where they're getting their alert services from, where they're getting their trade ideas from, and be able to make your own mind up? Wouldn't you much rather learn how to read a chart? Much rather learn how to find stocks to trade that are meeting certain criteria that make them intraday tradable? That's much better. That's much better, because I teach you. It's the old adage of give a guy a fish, I'll teach him how to fish. Signals and alerts, I'm giving you a fish, and you've got to be able to cast at the same time that I do, and reel it in at the same time that I do. Whereas if I teach you how to fish, you're able to spot where to fish, what to fish, and how to fish. And that's what I'm doing. Was I always a trader? No, I wasn't. My previous life, which is not too long ago, was regional vice president of a software company. So I had a very, very lucrative six-figure salary, managing the sales operation for Europe, Middle East, and Africa for a software company, a multinational software company. Now, have I been involved in the finance industry? I've been investing in, so I've been doing my own investments and swing trading a little bit for about 12 years. I only really started proactively day trading due to the pandemic, and I lost money. Okay, I lost money. Like every trader that I know that gets into the market without any guidance, thinking that they've seen it all, they can do it all, and they can learn it all very, very quickly, I lost money. And it took me about 7 months to turn the corner. So the severance package I got from my previous company, that had all gone. I was into my savings at this stage when I finally turned the corner. But I was so invested, and I enjoy the thrill, I enjoy the challenge of trading. And then since February, so I did a small account challenge in February where I took $5,000. I actually made it into 120,000 at one stage, but then I gave some back in the last week, and I finished at $78,000, from under $5,000 to $78,000. So it's over $74,000 of profit in February, 19 trading days. And I did that just more for clout than anything else, if I'm being completely honest, trying to build up a social media following and the likes. And on the back of that, people started asking me if I could teach them, if I would mentor them, if I would, help them along. So I created the course due to demand of this channel, believe it or not. Now, the people that have been on the course have been very complimentary, because it's helped them with their trading. Some of them have got experience trading, some have not. The absolute beginners, it's a good course for newbies, because I kind of do away with all the technical jargon, and it's in lay terms. It's people that have got experience but were finding it difficult to remain profitable. The course has helped them, but it's giving pointers that they've had that eureka moment. This is why I keep losing money. Well, absolutely, you can cover the course in, depends on, you could probably cover the course in a long weekend. If you're used to binge watching Netflix box sets over a weekend, then you can probably cover the course in a weekend. My question to you is, how well can you retain the information? Because you need to invest in yourself. The skills and the methodologies and the knowledge that's given to you on the course is a potential career path. Now, if you were learning to be a database analyst, you wouldn't do that over a weekend. And you certainly wouldn't give yourself a month say, okay, I'm going to learn how to be a database analyst, and that's going to be my new potential career path. I can learn this in a month and I'll be proficient and I'll be able to go out and start earning 6 figures. You wouldn't do that. So I would recommend you treat learning how to trade a similar way. You've got to learn this, pick up the knowledge, learn the knowledge, practice the skills, practice the discipline, and practice is a big thing. Do that in a simulator, do it with paper money. Once you've proven that you can be consistently profitable with paper money, you're going to have red days. You're going to have days where you lose money. Not trades, days. I've had weeks where I've lost money and I'm a profitable trader. So you've got to bear that in mind. But as long as you manage your risk effectively, when you lose, you're not losing all your account. You're not losing all your money. And that's a big factor. So I've had quite a lot of people on the course over the last since I published it in March, because it's only been there since March. So I published it in March, so a little over 3 months now, almost 3 months since I first published it. We've had a lot of people basically from this stream primarily that have taken the course and are now at the stage where they feel confident enough to open a brokerage account and put money in and start trading. Then I've given no assurances that people will be profitable, and I will not give assurances for people to be profitable, because it's down to you. That's like me saying, okay, you're going to take an advanced driving test. Now you're going to be able to drive a Formula 1 car faster than Lewis Hamilton. The chances are you're not. Okay. But could you drive? Will you be able to drive safely after you've taken your advanced and passed your advanced driving test? Yes, but don't overstep your mark. You know, temper your expectations. And this is what I say: is that if you don't have money to lose, don't get involved in trading, because it is risky. I'm not saying you're going to lose. Most people do. I'm not saying that you will. But the likelihood is that you will lose. It's up to you to decide how much you lose. And you've got to manage that effectively. Get the Lambo money, boys. Lambo money makes me laugh. You've got the whole thing. People hire cars. You go, if you've ever been to Miami. So my old job, the HQ was in Miami. The office has got 3 floors on the Bank of America building in Miami. I was in Miami on a regular basis, and you see these 30 grand millionaires on the strip. And what I call a 30 grand millionaire is these people they've hired a Lambo or a Ferrari for the evening, or maybe for 2 consecutive evenings. They're paying maybe $1,500, $2,000 just for the image. Most people that I know that have money don't flex it. There's no need to. You know what I mean? So I like Sterling, don't get me wrong, on capital markets. Sterling Trader is a good platform. I just prefer Dash Trader. So I'm using Dash Trader, and and one of the reasons I opted for Dash Trader is I can use Dash Trader with Interactive Brokers as well. So I use Interactive Brokers. It's two different applications. I'm using the Dash Trader with an Interactive Brokers feed, which is directly from Dash Trader, or I'm using the capital markets OEM version of Dash Trader. It's the same software, but it's 2 different applications. But what I'm able to do is use the same templates. So I'm able to use the same dashboard. I'm able to use the same charts, the same hotkeys, and everything else on both, and it works for both. So one of the reasons I've got used to using Dash Trader is because I use it with Interactive Brokers and Capital Markets Elite. Is Sterling Trader a worse platform? Actually, Sterling Trader in some cases has some better features. In other cases, it's probably not as good. So, you know, it's either which way, Sterling's a good platform. I can recommend Sterling. I disagree. So Sterling's, providing you've got a direct market access, Sterling can be really good as well. Yeah, there's videos on how to set up the platform. You can even use, I've shared, a lot of the people on the course have opted for Dash Trader because that's what I used to teach. And I've shared my my Dash Trader files, so hotkey files, dashboard files, chart files, all that kind of stuff. It's just trying to give people whilst I'm, like I said, I'm not guaranteeing people success. I'm not saying you're going to be able to trade like me in a fortnight. With practice, I hope that you'll be able to trade better than me, because I still, to this day, succumb to emotions from time to time. So if you can trade better than me, great, but that only comes with time. It's like going to the gym and trying to push 250 pounds on the bench. Can you do it? Anybody that says that you can't, they're lying. Of course you can go to the gym and push 250 pounds on the bench. Are you going to do it on your first visit? Hell no. Hell no. But you can build yourself up and you can work yourself up and you can train yourself to a point where further down the line you're able to build, bench press 250 pounds. Trading's no different. It's all about skill. It's all about muscle memory. It's all about skills. It's all about practice. It's all about discipline. If you go through the process of building up that muscle memory, building up that practice, will you be able to trade a large account and have, like today, for example, I had, what was I trading? TNXP. I had a position that was like over $100,000 worth of equity in the position. And I wasn't breaking a sweat because I wasn't risking $100,000. Not at all. But then that's the whole point, is you've got to be able to distinguish between the difference between your equity risk and your trading risk. And there's a whole difference, because if the trade goes against you and you get out fairly quickly, you can cut your losses to a certain degree. You're not going to lose all your money. You're always going to still, maintain a certain level of equity, unless you take high leverage and you hold on to your losers too long, and then you end up getting margin called because you don't have enough equity to support the position that you're in. I don't recommend which platform to use because that's personal preference. Some people like Thinkorswim, some people like Trade Zero, some people like Sterling, some people like Dash Trader. I can give you my preferences, but I don't want to push my preferences on anybody. What I do recommend is a number of different platforms, and I do suggest that you get a platform that gives you direct market access, direct routing access, that you are able to program hotkeys, hot buttons, scripts, that kind of stuff. So something that's configurable, something that you can actually configure to use and get used to using for yourself. So I don't recommend a specific platform simply because it's all down to personal preference. What I like is not what someone else like. One of the guys I look up to in trading, he prefers to trade on Thinkorswim, and he gets 0 commissions. But I prefer a direct market access solution, and I pay my commissions. I think it's worth the price to pay the commissions for the direct market access and the platforms that I'm using. Again, I'm on Capital Markets Elite Group here, okay? What you're seeing is Capital Markets Elite Group, and they will charge me, it's $125 a month for platform and data fees. And however, if my commissions are above a certain level, and they always are, for example, yesterday alone, it was like, would have paid for the month's commissions. So my commissions are always above that level, but they reimburse me the platform fees. They don't reimburse me the data fees, which is 35 quid a month, but they reimburse me the platform fees. So I end up with you know, effectively getting access to Sterling, it's not Sterling, access to Dash Trader for free. And the same would be for if I use Sterling Trader or if I use their own proprietary system. They've got 4 different platforms that they will allow you to trade on with them as a broker. I think it will allow you to trade with a lot of platforms, but they recommend, there's 4 that they would recommend. Otherwise, you're having to get APIs and things to do that. Well, check my link tree. You've got the course is on the first link there. Just check it out. And if there's on my link tree also there, you've got my email address. So if there's information you need that's not on the web page, just send me an email. I'm happy to answer any questions. In fact, when I'm not trading in the morning, I've got lots of time. So if I'm not out with the dog, I'll respond to your email. You know what? This is the busiest close that I've had without trading. We've only got a couple more minutes. The question is, do I want to stick around for GME earnings, GameStop earnings? Trying to see if this is going to be on broadcast live. Is the earnings call going to be broadcast live or not? Okay, so okay, I'll put it out to you guys. Because earnings, GME, GameStop have got an earnings call after hours. Well, he's the second in as many months that stands down. Yes, stands down. He's the second in as many months that's had to go from the board because Meta have been absolutely shocking in terms of results. I mean, let's have a look at Facebook. We've just finished now. We've just the market's closed for the day, but let's look at Facebook. So Facebook right now, let's look at it on the 60-minute. So it's following the market. If you look at it on the daily, zoom out, you can see when we dropped, absolute hell of a drop here back in February. Facebook lost a third of its, overnight, effectively, a third of its value. Then it continued to sell off. We had this bounce. We gapped up here the end of April, I think it was. But then we've been selling off ever since. So Facebook's not having a good time at the moment. When you think that just earlier this year, well, the end of last year, the highs, it was 380s. It's now 186, so we're less than half the value. It's lost half its value in, what, 9 months? So, of course, people on the board are losing their job. They've tried to rebrand themselves. This whole Meta business is a lot of bunkum. It's a marketing stunt that's gone wrong, clearly. And it's not going to detract from the fact that people are moving away from Facebook in the droves. They really are. What time scale do I trade on? What time scales? And I recommend that you never trade on one particular time frame. I typically will have the 1 minute, and I'll get my entries on the 1 minute time frame as a day trader, as an intraday day trader. But I'm looking either side of my 1 minute chart. I've got the 2 minute next to it, and I've got the 5 minute on the other side. Below it, I've got the 60 minute and the daily. So the 2 minute and the 5 minute, I'm looking for confirmation for the trades. I'm looking for micro entries on the 1 minute. I'm looking for patterns on the 1 minute, but I'm also looking for confirmation and patterns on the 2 and 5 minute. On the daily and 60 minute charts, I'm looking for key areas of support and resistance. So if I'm looking at an area, if we're approaching a key area of resistance, I don't want to be taking a position for a breakout if I know historically that we've not got over that level, or if we find it difficult to get over that level. I'll wait for confirmation or a break of that area before I can get in there. So I always look at multiple time frames, DJ. Alistair, look into my eye. That's all I'm saying. So yeah, Meta or Facebook's been having quite a bit of trouble. Way beyond where they perceive their own value to be, and way beyond where a lot of the analysts would expect them to be based on their valuation. Zoom back in. Let's go to GME. So that's the question. Do we want to be... And to be fair, I was right. And come on, let's credit where it's due, Alistair. I was right when I think it was 860 when I bought those. The price was 860 when I bought those calls, and I put them down for 950. And I put them down for the beginning of June. I put them down for this Friday. But a little over a week later, they were at 955. I was right. I was right. No, I bought them. It was 8 something when I bought them, but I was right. They went up to 950, and I'll just check when I bought them. 882. I bought them at 882, and I bought strikes at 950 for the 3rd of June, and it went up to 955. And so I was right with the trade. The trade was right. I'm not worried about that. The problem was that I didn't take profit. And one of the things I preach is take profit as you go. And I only bought 3 calls. I only bought 3 calls at the time, but I should have sold at least 1. And that at 955, that would have covered the cost of pretty much the cost of the other 2. So look, if buts and maybes, you know, if my auntie had a parabolic, she'd be my uncle, and all that kind of carry on. So if my auntie had a handlebar, she'd be a bike. But you know. So yes, Toys, there is an introduction to options. I'm building out an options stroke swing trading course as we speak, which will supplement it. If you're a member of the Day Trade with Tony course, when it's published, you will get first actions and you will get access to it for free. But then it will be a separate course. I'll have a swing trading stroke options trading course that will be, you can bolt onto the day trading course, but I'm building that out as we speak. I'm sure you could. I'm sure you could publish one, Alistair. You've learnt enough. You're profitable. You're making. Today. You made enough profit to which would equate to a 6-figure income. Just saying. It's great. Do you know what? It's great to have people that are in the stream. That when people are asking me, well, you know, is your course worth it? I don't have to say anything. I'll just let the people that have taken it say it for me, you know? But I actually enjoy it. So trading is trading. We do the trading for the money. And I do enjoy the trading, but this, I get more of a buzz out of, you know, doing the teaching part of it, and engaging and seeing people go from novice to profitable, and that for me. And I'm constantly asking people, give me feedback, you know, how have you done today? What's your current P&L, etc.? Are you live? Are you in the paper? And I get a kick out of that, because the same way as when I was a manager, managing people, coaching people and developing people, I got a kick out of seeing them grow and seeing them become successful in their own right and move on. And you know, if you're going to be a successful leader in any field, you need to have that kind of mentality. I'm the third best blog. Yeah, absolutely, Alistair. Not the best, just the third best. Right, let's see if I can get the GME webcast. So that's Q1. I'm looking for this 2021. No. No. I'll tell you what I'll do is I'll pull up Benzinga. MongoDB. Let's have a look at this. That's taking too long. Okay, so let's pull up the news. Let's pop this out. So this is the news, and we've got earnings that will come out through. If there's something that you like to see more of and you want me to drill down, just let me know and I will drill in. Where are we having a Christmas party? It's a good question. I think you're paying for it, Alistair, aren't you, with all the games that you make? So we're getting all of the earnings coming through here. HP Enterprise, HPE, that is. They're not doing too bad. Facebook, Sheryl Sandberg's leaving. GME missed their sales estimate. Doesn't surprise me. Oh, don't beat the sales estimate. 1.83 billion. Beat the 1.32 billion. Earnings per share was a miss. Oh, no, it was a beat as well. $208 misses 145. Not 208 beats 145. That makes no sense. So this is SentinelOne, Elastic, Viva, MongoDB. Orpient. So this is the news feed. So in case you're wondering what you're looking at right here, right now, this is the news feed from Benzinga, and it's coming news as it breaks. It comes out here. This is just one of the many things you get from Benzinga, and I get all my alerts, scanners, trade ideas from Benzinga. It's the second link in my link tree. Try it out for free. 14 days for free. Just try it out, see how you get on. You get calendars. It's a resource that is worth its weight in gold. I would say without Benzinga, I would not be profitable. Simple. Well, we've had power hour, so now it's happy hour. Well, don't forget to join the Discord and the Facebook group as well, Flossie. The Facebook group's not that very active, but the Discord is quite active. So don't forget to join the Discord as well, because I post all my watch list and everything in the Discord. I do trade reviews in the Discord as well, so don't forget to do that. But if you've got any questions, reach out to me directly. Blue Apron unlocks access to new customers on Walmart. So GME is moving, guys. This is GameStop moving up, 127. So even though they missed a few of the numbers, this seems to be a positive reaction to GameStop. Well, I don't know about another Alistair in the room. I'm not sure if I can take that. One's bad enough. Okay, guys. If you're wondering, so I'll just cover this actually whilst we're here. If you're wondering what I've been looking at, where I'm getting this news from, so all of this rolling news, why GameStop's moving, how much it's moving, all this kind of stuff. If you go into my TikTok, and I'll bring this across for the Twitch and YouTube users, so you'll find these links in the description. But if you go into my profile, double click on my face. That sounds a bit ominous, but double click on my face, it brings you to my profile. This is my profile, and you'll see the link here says the TikTok trader. So if you click on the TikTok trader, it will then bring you to a splash screen like this, or it will take you straight there. Go straight through, okay? The first link is, of course, you've got all my socials at the top. You've got my email here. You've got my YouTube. Go and subscribe to my YouTube channel. I need as many subscribers as I can. You've got all my other socials there as well. If you click the top one, it brings you to the course, if you haven't already. You get all the details of the course here. As you see, there's probably a good 20 hours of lecture material with quizzes or exams, whatever you want to call them. You've got an additional swing trading course. That includes an introduction to options as well. A swing trading course in there, which I'm building out at the moment and will become a course in its own right. There's a whole library of reading, additional reading material. That in itself is worth the fee alone. As I say, it's $146 a month if you're in Ireland. It's 130 euros, 120 pounds, depending on where you are. And you can get a discount if you go for 3 months, bigger discount if you go annually, whatever it is. If you keep scrolling down, you can get my profitability. I've got 6 months reports, which has my report statistics on from TraderView, and it's got my brokerage reports. It shows the corresponding months, shows how profitable I am over the last 6 months. And I've not deliberately left May out. We've only just finished May, but all of the last 6 months, you'll see I'm profitable. If I go back to the link tree, this is what I wanted to get you to. So Benzinga, you click on the second link and it brings you to Benzinga Pro. This is what I use for all of my scanners, my alerts. This is where I get my trade ideas from. It is an absolute godsend, and it really is one of the best tools for day traders. It really is. And of course, there's options and swing trade ideas and all kinds of things from it. You can experiment with it. But in terms of stock selection, in terms of scanners, every single day, Benzinga, I can't praise it enough. Start it for free, 14 days for free. If you don't like it, don't continue with it. You don't need a credit card to get the free trial. Just go in there, let's say check the link, go in there, try it for free. You've got tutorials and stuff. If you do, after the 14-day free trial, if you do like it, let me know. I can probably get you a discount, or I can get you a better price than the standard $177 a month or $1,200 a year, or whatever it is. Just let me know, and I will. I'll fix you up. In terms of journaling, so my analytics and my what's the word I'm looking for? Statistics. I use TraderView. I review every single day. I go back and I look at my trading. I look at what I've done right, what I've done wrong, where I could improve, everything else. And I keep abreast of, am I still profitable and why? TradingView, Dash Trader as a trading platform is great, and it is my go-to trading platform, but the charting is somewhat limited. So if I want to take a deeper dive and look at something a bit more in depth, I'll look at TradingView. And TradingView, you can go in there, you can download the app, regardless of what platform you're on. They have an app for every platform, and it's free. So check that out, TradingView. There's even a paper trading account in TradingView as well if you wanted to. Now, I just mentioned Dash Trader. That's the platform that I use. You can get a paper trading or simulator version there. You're paying for the platform and data fees. And again, let me know if that's something that you're interested in. A couple of other partners I've worked with in the past. I did the World Series of Day Trading the last couple of years with TradeNet. They have funded accounts, so you can get fully funded accounts with them. Check those out, and if you need a broker, Interactive Brokers is recommended there. You can get free stock, and if you get free stock and sign up through Interactive Brokers, I get free stock as a result of that through that link as well. Otherwise, you go with Capital Markets Elite Group, you get additional margin. I don't get a kickback from Capital Markets Elite Group, but in any way, shape or form. So that's me doing my sellout little piece, shilling for everybody, including myself. I'm going to end the stream, so enjoy your evening, and I will see you before the 90 minutes before the market opens tomorrow. Have a good one, guys.